Hey everybody, Marty Mazar. Good afternoon, June 14, 2016, your first video of the week. I think I can keep this one pretty quick. I want to start with the chart. Last 3 days, you've noticed stock market has sold off a bit. Today it was down more notably than where it actually closed. It did close below my trend line here, but I'm going to leave that there and see what happens in the next few days. Those of you who've been paying attention to these videos know that I've been observing the fact that volume has been declining on the up days. And expressing that that's not something that would engender great confidence that we're ready to take off to all-time highs and then live there going forward. Typically, when the market rallies, if it's a really good rally, you want to see it confirmed by conviction. That shows up in terms of the number of shares that are trading hands. And then you notice on the last 3 down days, volume is higher than it had been on the up days. So that again supports that technical notion that maybe we shouldn't be real optimistic in the very near term. That could certainly change tomorrow. So this is just the pattern that I've been observing of late. So this decline really doesn't surprise me. It shouldn't surprise anybody. Of course, it comes along with some headline news that the polls in Great Britain have been actually moving toward the "we want to leave" camp, and that is causing some concerns. I mentioned in last week's TV interview that volatility was really cheap and that the market was just kind of complacent when it comes to the potential risk around this Great Britain vote. And ironically, since then, the VIX index had spiked about 80%. So the implied volatility in options trading suggests that traders are getting nervous and hedging against some potential downtime or a downdraft in markets. And quite frankly, also the move in the market here in the US really is inconsistent with that dramatic jump in the VIX. Doesn't mean that we're going to revert to some mean relationship between stocks and the VIX. In fact, the VIX was down a little bit today, which suggests that maybe some of that hedging was taken off of the table. I'll say this, that relative to the rest of the world and in light of the potential uncertainty around that Great Britain vote, the U.S. market actually, I think, has held up amazingly well. I think we could have traded substantially lower, and we may still. And I really think the fact that we haven't has to do with the fact that right now the Fed is meeting today and tomorrow, and there's just no way Janet Yellen is going to announce a rate increase right now. In fact, I think she's going to do all she can, or at least I think traders think she's going to do all she can to kind of quell some of the volatility and create a little more optimism about the economy and about the market going forward. They want to raise interest rates. They just are being so careful in their timing. And with the Great Britain referendum coming next week, and then of course last Friday's jobs number, they're not going to be ready to do it in June. Things begin to improve, Great Britain stays in the European Union, or they leave and we realize it's not the end of the world. Then July comes back on the table. Looks like the odds, or at least Fed funds futures, are pricing in September as being perhaps the most likely date for just one rate increase this year. So of course there's going to be a lot of data showing up between now and then, and the market's going to do a lot of interesting things between now and then, and that'll actually gauge what the Fed ultimately does. So folks, I think I can just leave this one here and keep it really short. Stay tuned. I'll have more for you tomorrow with the TV interview, and then Thursday with another one of these, and then over the weekend with the usual weekend commentary. So stay tuned. Expect a lot of short-term volatility, but expect that we will continue to keep our long-term perspective, stay diversified, look for value creation. I think there's a lot of that in the world, despite what the headlines might suggest about near-term risks and fears and so on. Thank you, as always, for watching and listening, and I will talk to you very soon. Bye-bye.